from my perspective, it was basically investing on speculation. And I don't like investing in speculation. My goal...
Yeah, we don't play hope investments, we call that.
Right.
Yeah, well, let's buy it and hope it goes up.
Right.
No, you want to buy something that's $100, you're buying it for 70 or whatever.
And like I said, I was doing, in my mind, I was doing that already with the securities, the long-term 30-year horizon. I'm buying these on the assumption that they're going to appreciate. I didn't want to have all of my assets in speculation. So I wanted immediate return, even just 2%, 5%, whatever, as long as it was generating some cash flow, I was fine. But one bad hot water heater, one roof repair, one toilet repair, and that wipes out the year's worth of potential profit.
Sure.
Too fine of margins for me. So that's
because I think what you recognize is the fact that what they're asking for the property versus what it's bringing in rents is so high because of that hot market that there's no profit left in it, because investors are ready to buy those so that they can play hope investments. And yes, I bought one, and maybe they get some tax depreciation or something like that from them. But that doesn't mean that that's what you need to play, because of the fact that you're going, it's set at such a high value of income versus return versus debt, that there's just no margin for error if I have a bad tenant. And guess what? We're going to have a bad tenant. They're inevitable, right? They're out there. So keep going. I just like to sometimes explain that out and talk to myself. So now you got a duplex, really no margin in it. You're looking around. What are you looking at, and for what reason?
So I was looking at multifamilies, duplexes, triplexes, quadplexes, simply because similarly, single families were experiencing the same thing. Everybody that bought their homes in the 90s and early 2000s or 2010, 2011, they were trying to cash in on the appreciation. So they were selling these single families for $300,000, $400,000, $500,000 that you could only rent for $1,800 to $2,200. So again, there's no meat left on the bone. So I was figuring if I bought more doors, then it would, more units.
Right.
It would increase the margins a little bit, but it was extremely difficult to find that. And like I said, the goal was produce another income stream. And with what the deals were turning up to be, there's very little
profit in.
Right. There's very little income.
So you were hoping to the fact that you could put management under one roof, whether it be a duplex, a fourplex, an eightplex, you would be able to gain a better yield from it because of more. It's just it's just time value of money. You're breaking it down. You earn a better yield for the dollars you put into it in income. What we actually do when we do that, though, is we take on more risk. We diversify tenants. That's great, but we take on more risk that the vacancy factor on one of those will probably become vacant. As we talk about that 20% that you put down as a down payment, that's usually about what the vacancy factor of those are, and so therefore you can pay the bills, but you really don't receive an income. And what that equates to is I just have taken an amount of money and I converted it into a debt equity position here that's not borrowable. And I am now dependent upon these income and the tenants and the breakdowns and things of that nature to bring in the income. That's where the bad news of real estate comes in. And what I mean by that is, if you've ever talked to somebody that said, I had a rental property, that was a pain in the ass, I don't want to do that, I'd never do that again, the tenants screwed up the property, and okay, I get that, I've had those. But that wasn't the tenant, that was me. It was the structure of that transaction. That's what did it. And I'll give you an example of A versus B. A, you never wash a rental car, okay? So if I rent to somebody that has no pride of home ownership, then they're not going to take care of the place. They're just they're transient. They're going to be there for X amount of time. They're not going to buy it. They're just, okay, fine. It's kind of like what we say. You never wash a rental car.
Sure.
Okay. So with that, you have to take the headache on of, they moved out. I got it cleaned up. I re-rented it. Now I have somebody else in there. And all that really is just one little business. That's what it is. It's just spitting out. Yeah, I sell time. That's what you do. I sell time to this place and I have income coming in.